So how do you buy a reverse mortgage foreclosure? In today's video, I'm going to explain to you exactly how to buy a reverse mortgage foreclosure and also where the opportunity is in pre-foreclosures and this hidden little niche business that you've probably never heard of that is an absolute gold mine. So be sure to stay in the end so you can get all this valuable information and insights. So the number one thing I would tell you is this is not a pre-foreclosure deal. Usually in foreclosures, I love the pre-foreclosure deals, and I'll tell you more about that in a minute. But the reverse mortgage foreclosures are typically not that, and the reason is that they have to sell them for 95% of appraised value. So if you're buying from the homeowner, then it has to be sold at 95% of appraised value or more, and that's not a deal. I mean, that's not anything that you want to get involved with. So don't do them as pre-foreclosures. Do them if they go to auction, that's fine. Then they'll sell for what they sell for, but not on a pre-foreclosure basis. But let's talk about, if you're talking about foreclosures, what you might actually want to do and what the best things are to do. So at foreclosures, you can go to the auction and bid, which my experience of it is you'll find good deals, but it's a lot of work to do, and you're subject to any idiot with a checkbook. And a lot of times people get auction fever at auctions, and they're paying like almost retail price for properties at auctions, which I always think is incredibly dopey, because if you're going to go through all the work of buying at a foreclosure auction, you're going to take the risk of like disputes with former owners and things like that. At least you have to get the property really cheaply. And if you're going to buy properties at retail, why not just go through a realtor and look at 100 and pick the one you love best? I mean, that's a much better way to do it. So if you're going to be buying foreclosures, I think pre-foreclosures are absolutely the place to be. And that's working with former owners that are in foreclosure and want to sell their property. Now, I've made a special twist on this, and I'm going to fill you in on the end about the ways you can work that's really a hidden underground way where you can make money from mortgage foreclosures without ever buying the property and without ever competing with any Yahoo at an auction. But I'll get to that at the end. But right now, let's talk about the pre-foreclosure. So you can go and meet with people and see if they're interested in selling the house. And this opens up the avenue for some creative financing. Like, for example, I used to buy houses often subject to. What that means is that they would agree to sell me the house, and instead of getting a new loan and closing on it, instead I would take ownership of the house by getting a deed from them, and then I would catch up on the missed mortgage payments. We get something called a reinstatement figure from the bank, which would be basically the missed payments plus interest and penalties plus the legal costs of foreclosure. And sometimes you'd even get a payment plan on that. And we would catch up on the mortgage, and that was built-in financing. We'd often do that when we're doing deals at the last minute where there's simply not time to line up other financing. So it can be great because it keeps your cash down. You're not pre-qualifying with the mortgage company. You're not putting it on your credit. You're simply wiring them funds to reinstate that mortgage. You're getting a deed to the property, and then you make payments. And then you're going to refinance later. You're either going to sell the property, it's a fix and flip, and pay off that mortgage, or you're going to refinance it later if you're holding it for a long-term rental. But these people who are in the position where they're going to lose the property anyway are the ones who are in a position to say, yeah, you can take over the mortgage. What's the difference? It's going to foreclose next week anyway. And so pre-foreclosures open up that kind of flexibility. The other thing I would say about pre-foreclosures that I don't like at all is that you're dealing with people who are really down and out, and usually they're so desperate to keep their house. And really, as a pre-foreclosure investor, you can't be like reinstating their mortgage and letting them stay in their house, because if they couldn't pay the mortgage, they probably can't pay your rent either. And I don't really want to be that guy that's kicking poor people out of their houses. It's not my thing. So I found a better way to sort of skin this cat, and that's with something called the overages business. And the way that works, when the property gets sold at the auction, which I had no control or involvement with, there's often a pile of money left over called excess funds or overages. And that happens when the property sells for more than the amount that was owed on the mortgage. Very common these days because properties have gone up a lot in value over the past couple of years, and these mortgages that are foreclosing are typically older. And if you look at a property where it was mortgaged 10 years ago, well, since then, the property's probably more than doubled in value. So even if it was 100% financing back then, it's probably got 100% equity now, meaning it's got, if it was bought for $200,000 back then and fully mortgaged, it's probably worth $400,000 today, so you have all that equity cushion in it. That is what makes these excess funds or overages. And so what happens when the property sells, that money's left over and it's held waiting for the former owner to come and claim it. Former owners rarely know there's any money to claim. They have no clue about it, so they don't apply for it and they don't get it. So what we do is we get the lists of people that money's being held for. We reach out to them and say, hey, there's money being held for you. Would you be interested in working with my company? We go and get these funds for people. We can get it for you too. No risk to you up front, just totally contingent fee. If we're successful, we get paid. If we're not successful, it doesn't cost you anything. And would you like our help? And when people say, yes, I would love your help, then we go and we get the money for a percentage. What's great about this business is we're helping people who are at a terrible spot in their life. They've lost their home. Half the time they're like living in relatives' basements or in a week-to-week motel rental, just really rough situations. And we help them get back on their feet because we often get them tens of thousands of dollars, occasionally even over $100,000, and we help them get restarted in life. And we have a great and robust business that frankly I'm really proud of. And I don't have to go to the auction and compete with every other Yahoo with the checkbook because I'm not doing that. Instead, I'm helping people who've lost everything get back some of their dignity, get back money they never thought they could have, and get restarted in life. It's truly wonderful work. And you're right for this business if you truly want a business where you help people and you make great money. If those two things get together, then I want to teach you how to do this business. And the way to get started, click on the link at the bottom. I have an intro to the Overages business video for you. In 20 minutes, I pull back the curtain on this business. I show you the ins and outs and show you how you can get started in this business. I'm happy to train you in the business. Click on that video and I'll tell you more about that, and I'll tell you more about the business. And maybe, just maybe, this is the perfect business for you.